Hello everyone, welcome to another weekly market review. It is the 14th of December 2020. We have a couple of big opportunities right in front of us. Think it's going to be a great trading week. Let's get right to it. As usual, we start with the total market cap chart. What we have on the weekly as a candle, this is not a bullish looking candle. It's called hanging man. On a high time frame it's okay, but again with candlestick analysis we need confirmation with the next candle. What we can see over here is still an unconfirmed either reconsolidation or a distribution, so there is supply, there is demand, but what I can show you on the daily could possibly clear it a bit better. So what we have in terms of a dynamic support is this VWAP, is this anchored VWAP from here. So for now what you can see is, there is a kind of compression, but see the first reaction from the support, see the second reaction from the support. Again, still no confirmations. We have had a plan most recently. This is what I posted on Twitter. I had not posted this channel or these fibs right here, but when we were down here we were looking for a move back up. If it would have been kind of slower we would have grinded, but what we did is we broke back into the channel. If you know and you've been with me for long enough, trading channels, breaking above a midpoint or breaking into a channel gives you a target of the mid of the other channel. We hit that target, and currently what we're doing is we're consolidating, but we're kind of starting to break below the channel. What we have right now, this 3-day level, if you look at the 3-day chart, just quickly I'll show you the 3-day chart. So you can see how significant this 3-day level has been. Basically price is just compressing really strong right now, but this 3-day level on the previous top, which made that big move to 16,000, you can see how significant it was. Even on the way down, price respected it very well, broke below, turned it into resistance, and then made the big move down. So currently we have reclaimed it, and what I would say is you need to watch price and see what it does, because we are still within this channel, we're still above this 3-day level. There are other signs. While I'm showing you the Bitcoin chart, I'm going to discuss them, but for now we are above this 3-day level. I would say as a game plan, if price continues to hold it and reclaims this mid channel, you can trade to the top of the channel. But if we continue to hold price over here, then I think we can just attack out of here. But if we break this 3-day level and flip it into resistance, I think there is a potential for that move down. This is very key and very significant. What we've done is, but we've already made a big move up, so it is quite normal to retrace slightly and then move up again. But what I would say is, if this 3-day level turns into resistance again, then we are in for the kind of correction that I had drawn up here. Altcoin market cap on the weekly, you can see again after a couple of big wicks not getting the kind of follow through. This is on the weekly. Another very significant thing I want to show is just about swing levels. Alright, so you know that the move 2017 for altcoins was very, very violent, much more than what it was for Bitcoin. But what happened on the way down? You look at this, how steep this V is, where did we finally find a swing level? We found it all the way down here, 120 billion. Look at what price did. We held that swing level and we made a big move out of it. Now what does price need to do? Well, price needs to find a new swing level. guys. This is significant for the altcoins, but it's also significant for any chart. This eventually heads towards Bitcoin, and we're going to discuss that on BTC, because BTC has a better potential of finding swing levels where it is. But in terms of altcoins, where can you see the other swing level? There is no other swing level. This is the swing level where we got some kind of a reaction. If you're looking any higher, I could say on a lower time frame, not on a weekly, this could possibly be a swing level. But you can see this key swing level currently is resistance, so it is not support, but you can see how significant we broke here. We held this on a weekly closing basis, and you can see exactly where we're finding resistance on a weekly basis here, this level on the weekly, so we're finding resistance here. So we don't have a very clean and a clear swing level on a weekly closing basis. I could say that we have a level which is slightly lower, this 189 level, 190 level. It's slightly lower over here, but on a weekly close basis we're looking for that swing level. On the 3-day, you can see what have we done. Made a bearish engulfing candle, and the last 3-day is just a weak reaction for now for the bulls, but still you can see it's a very tight range. Look at how much tighter and how much cleaner it is on the altcoin market cap chart. Essentially this is the anchored VWAP band, which I think has very strong support if price does end up coming down. So also conforms with that weekly swing level that we were looking at. So we have to see right now, guys. There's no confirmation, but just look at this reaction, a strong 3-day engulfing. Of course, it has been strong enough to not get a continuation, but the reaction from the bulls has not been convincing. It has not been strong enough. I will discuss that a little bit more in detail with BTC, but you're looking at the 4-hour now. So for the 4-hour, something similar to the total market cap, the kind of reaction that we have gotten. So a higher range, price breaks down, we find a resistance. On the altcoin market cap, we have a lower range right here, which price is currently within. We'll make it on a closing basis. I think this is better as the range. So we have a lower range on the altcoin market cap. For now, what have we done? We've taken the highs out and broken back into the range. So as a micro play, I would say that if price does start to find support on top of the range, we are looking at least first this 4-hour level. Look at how strong this 4-hour level is. Price just failed to close above that. We had a strong move down, but yeah, if we can do that, you can start looking at playing this level to level, get a close above here, find support on top of the range, look for the next 4-hour level. Also, you could start playing it as a range target, and you'd have confluence with at least the 0.5, so it's significant for the altcoin market cap. But beyond that, for now, what I would say is that alts are in a tighter range. They're showing more weakness than BTC right now, and essentially because correlation for now, though we've had one very small brief period of a loss of correlation, but outside of that, correlation for now has been positive. So if BTC is moving up, a few alts are moving up stronger, BTC is moving down, then the downside opportunity for shorting is with altcoins as well. So here we are on the Bitcoin chart. You can see how different it is, the weekly candle on BTC, and essentially again this is a very clean hanging man. If you see these, this just signifies weakness. Essentially it's not a reversal candle, but what it does is it signifies weakness. We did have weakness, we moved up on lower volume. These are all spot exchanges, you know, this is spot volume. But again, yesterday's move, the weekend move, has been on low volume. That's why you call it a scam weekend pump. But what else has happened in this low volume? So unlike altcoins, BTC has some cleaner levels, and you can clearly see them. This is a 12-hour block which has been supporting price along with the anchored VWAP right here. But what we have very cleanly is also resistance. Just look at this on the daily time frame. So you can see how clean this resistance is. Resistance, a fake out, break back down, resistance, break back down, we're coming back up. It's a resistance again. So this 19444, this has been a very, very significant level. So what I would say is it's not so complex, the game plan for BTC right now. And essentially all we need to look at is how price is able to react if we end up breaking through this level, you know. And until we do end up breaking through this level, I also want to show you something else. Look at the volume profile over here. All right, this is the volume profile. Essentially we're looking at almost a month. It's the 18th of November since price headed into the high 17Ks. All right, so just look at the volume profile right here. When we build a consolidation, ideally what you need to see is that when price is moving to support, you're seeing good buy volume and good support, you know. So you're seeing the bears sell into support, but that support holds. So a decent looking volume profile in a consolidation generally has a lot of volume at the bottom. I can show you a little example of that. Here you can see the volume profile right here. Look at what happened when price was here, up here. There was a lot of sell volume. And what did price do? We needed to come down and find support. All right, where did we find support? This is the previous consolidation. All right, look at the June consolidation. You want to see the volume profile specifically of the June consolidation, you can look at it. So where is the volume? You can see it is at the lower 1/3 of this range. You know, this is where the buying is going on. This is a sign of accumulation. All right, look at how different this was. August, where we broke down. The volume profile is in the top 1/3. And what did we do? We broke down to find support again. We found that support very close to the volume where most of the volume was traded. We found support close to that. Look at what the volume profile here is now again. So where do you see this consolidation resolving? You know, I mean, I can be bullish here. I would want to be bullish here, but for that I'd really want to see, I mean, this would be mega bullish. If price can do this, you know, I'm all up for it. But for now, what I can see is essentially what was going on in August. It's similar. Look at how high up the volume profile is. Essentially there's a lot of volume traded here, you know, so there is selling also, but there is so much buying that has happened up here, you know. Unless price is too bullish, you know, and price does end up finding support over this zone, then I don't think there is any arguments. There is liquidity here, there is liquidity up here, you know. These two zones have liquidity, specifically up here. So, you know, this is why I had a game plan for the Discord that yes, if price gets up here, expect a swift rejection. That's your confirmation that, you know, this is going to, that's your confirmation that this is going to bomb. You know, you get that liquidity grab and you get a sharp move down. It's not going to take so much time, you know. Sorry, I don't know, I'm having a bit of trouble drawing today. So you get that liquidity grab and you get a sharp move down. You know, it's not going to take so much time to do that. If we don't get a liquidity grab, then we have to follow the game plan on the total market cap chart. But what you can see is this move, it was on declining delta, which means there was less market buying going on here. It was on declining open interest, which means a lot of longs were closing as price was moving up. So a lot of the market is not supporting what happened on Saturday and Sunday. So that's something you need to be careful about. Also, what I can tell you in terms of psychology, which is very significant, is that price has been here, all right, for a month. It's literally been a month. So we had bears here, we had bears here. But what I would say is, when we have this kind of structural distribution, it is psychologically very difficult to keep looking for downside when price is finding support. Though it's all thin air, down here is all thin air. What is price doing? There's just a lot of volume being traded right up here. All-time high, getting rejections, low volume moves, again all-time high. It just smells like a trap, This is not, psychologically also it is a trap, because it's very difficult to sustain a bearish argument when price is failing to find lower lows. We had a low, we made a high, lower time frame we made lows, but this is held. So everybody's like, okay, higher low, price is just gonna move up. It's not the best structure for a higher low. I'd say if we hadn't taken this liquidity up here, we'd be making quite a bullish shape with an ascending triangle, but here it's a pretty simple game plan for BTC. I think if price does come up here, start getting a rejection, you should just look for that strong move down, because I think the next move, it should be strong, and we cannot gauge the depth of it, but I have a small way to look at what is potentially possible, because when we're looking at technical analysis, we're just looking at historics, right? So just look at history. We don't have too much history up here for BTC, but we still do. This is all the history that we have for price above 13,880, right? So above 13,880, this is all the history that we have for price. These are all the levels that we have. And again, in terms of swing levels, this is the last clean swing level that we had for BTC, which is, this is close to 12,600, 12,700, but essentially you can say it's 13K. This is the last clear swing level that we've had, where price has made some swing points. The high also got rejected from here. But if you look at historics beyond that, where are the swing levels? Much lower, 10,000, 9,500. So again, price needs to build a new swing level. And this is after a 100% plus move, guys. From 9,800, we have gone to 20K. So what do you expect price to do? And if price goes up with this kind of a weak level and a weak structure like this, which had distribution written all over it, how high can you expect this to go? So it is pretty significant technically, I think, what is going on over here, and also psychologically how people are now starting to, it's pretty difficult just by plainly looking at it, unless you're listening to my arguments, to be bearish up here. You're just like, oh, higher highs, higher lows, we're moving up, but the picture is not looking like that to me right now, until we do this, what I was talking about. So until we move up here, rather than getting a strong rejection, price starts to find support up here, I don't think this can sustain itself. But what I was telling you is, yes, we need to build another swing level. So what are the levels that we can look at up here? There's a couple of levels. This is the low that made the high, so it's pretty significant as a swing level. In terms of a closing basis, we have this level right here that once price did end up getting rejected from, got that strong move below. So we had these 14,700, 15,400, couple of significant levels. We have to match them up with a few other things, we have naked POC at these high 1500 levels, so that is significant also. But essentially what I would say is that if price does have to come down, rather than finding support up here, it would make more sense to find a swing level somewhere here. There is confluence with the channel as well, so high 1400s, mid 1500s, this looks like a very good zone and could be a zone of decent value. We'll just quickly look at the fibs as well. So it's close to the 0.5 zone. That could be significant, but of course this is the sign we'd be looking for. Since it would be quite a clear sign, we have to see what price eventually does from here. So in terms of a breakdown, if price does not end up moving up, then I would say that this is 19k is what looks to me as the significant level. But I think it's cleaner on the total chart. Total has a channel up here. BTC does too. If you're in the Discord, you know that we have a channel on BTC as well. But we can break down below this, test this as resistance, and then you can start looking for that potential downside. A very significant level has been this 18400 level on the chart, because you can see we reclaimed this. But what I would say is, if price does have to break, if we do have to move down, then this would not take so long this time. This would not hold as support, resistance, reclaim. So next time I think we break below, this should be a stronger move. So I think for the downside, a cleaner plan is on the total market cap chart. But for understanding where the strength is, we're at a very key zone on BTC right here. Move above and start finding support up here. I'm all for catching that next big move up. But otherwise, this is just a very, very crowded zone. There's just so many longs that have just sat here. They got a bit of a scare, but this was nothing. It was a 3, 4, 5% move down. The price came right back up again. I don't think anybody who accumulated here for getting to all-time high, it would be very rare, unless they're on heavy margin, that they would let go of these positions with this kind of a move down. So I think people are just happy, prices come back, it's so bullish. In fact, I would say even bears who are too bearish up here, I think they would have to be rethinking what is going on, and possibly many have even already bought back without getting that confirmation. So personally, I would not want to be in this crowded zone. This is just a very, very crowded zone, and I don't think this zone has any edge. Would either want price to break back above it, or for it to be confirmed as distribution and then play the move down. For the traditional markets, I have been for the last 2 months screaming emerging markets and small caps, emerging markets and small caps. Multiple charts have been shown. You can see it is still the small caps that are wildly outperforming. Strongest strongest month in its history ever for the Russell 2000. November, December, we're getting continuation of that. We already mentioned it. Again, a very simple thing that I wanted to show you. This is a base. We topped out. It took 6 years to build it, and then made a 50% move out of there. After we did top out, took another 3 years to build that base, made another move out of there, 36% move. Again, now it has been 3 years since the Russell has been going sideways, and we have had that breakout. After we make these breakouts, this is just a bull trend. It has been just 12% for the move since we have broken out. So I think there is still room for the small caps to run. We cannot exactly say how high this can go, but there is still room, considering that we have had another 3 years of sideways, and price has had a confirmed breakout on a higher time frame. So this is significant. Expect this to carry on. So here we have it, the emerging markets against the SPX, and you can see since 2010 what a strong downtrend it has been. What are we doing now? We spoke about this in October, but essentially we've built the pattern that we needed to. It is decent reversal pattern. We've had a confirmation with a daily close above, and essentially, let's see, we should be able to find support at this 0.01 level. But what else I want to show you is what is the big major factor for this downtrend. What we have here, this is the inverse dollar, so essentially this relationship is completely driven by the dollar. You can see the emerging markets started breaking down before the dollar topped out in 2011. Bottomed out, I'm sorry. This is the inverse dollar. And once the dollar had started pumping against essentially against the rest of the world, you can see what happened to the relative strength of the emerging markets. And what you can see now is the dollar has begun what could be a downside reversal, and this is the inverse dollar. We do still have a significant base to build over here. You can see that this is a base which is being built for the dollar, essentially right here. I'll just paint this orange as well so you can see it. Support, resistance, prices heading into resistance again. But if this moves up, which essentially means that the dollar continues its fall from this significant level right here, and you can know that the emerging markets have a great story for 2021. So keep this in mind. This is not over, and this is so very significant. We're looking at VIX now, and you can see that it is still sitting above this 20 level. The 20 level on VIX, just psychologically, it breeds uncertainty. You want for a sustained and a safe environment for the volatility index to start moving in these zones and flip 20 into resistance rather than holding it as support, because this is just reflecting the uncertainty in the market, and just look at how price has been. When price is above when VIX is above 20, that uncertainty is there. You need it to settle down. Essentially, this is the 2009 recovery, I'm sorry. And you can see when the trend really structured itself and really sustained itself for a decent period of time. You can see the best part of the trend, the VIX was holding 20 as resistance. This is the best part of the trend, just sustaining a very gentle kind of movement. This is the safest and the best kind of returns that you get in a market. But when it is above 20, there is always a danger for a strong downside potential. So what we need over time is for the VIX to start settling down below this 20 zone. And we have already compared the current rally to the 2009 rally a few times, and essentially this can sustain itself. But what would make it very safe is for this VIX to start moving down, and to really truly be sustainably bullish, we need for the VIX to find resistance at this 2025 level rather than finding support here. For the commodities section today, there is one and only one commodity that I want to look at, which is just so significant. It's having a very, very big moment in a very big month. I have been waiting for this for a long time to manifest, and what we have is a 6-year base, and price already moving very, very aggressively. Again, we have the consolidation. We have broken above the point of control of this consolidation. This is the month we are yet to, this is just still the middle of the month, but we are above the anchored VWAP of this range as well. The volume is looking good and looking like it's finally coming in as well. And I think once this moves above 15, this is the uranium ETF URA. Once this moves above 15, and even if it closes this month above 15, there's absolutely just thin air above. There is literally no price action and not much. And considering we are moving into the sci-fi age and we're moving into the space age, uranium is going to play a very, very significant role. And I mean, this is just a very, very big base and so significant once price moves up from here. If you want to get exposure to this, and I mean you're just lazy, you can get the ETF. But if you're looking for bigger gains, then get into the uranium market, start finding the small caps and the mid caps in uranium, which are on exchanges. They're available to you if you use any of the major brokers, and get exposure to this, because this is something that has been in the pipeline and waiting for a very long time. So significant.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!